Welcome back to the channel. First and foremost, happy to have you guys here. If you haven't yet, like and subscribe on this video because today we're going to get a lot of value. We're going to put our knowledge to the test here and we're going to learn some things. Okay. So this is going to be another back testing video, but I'm going to do something a little bit different in the beginning here, which I usually don't do. Usually you see me already have the market that I'm going to trade in front of me, but you guys are going to be able to see firsthand how I actually screen for a market and how 95% of markets I look at will actually be invalidated or invalid for me to trade. This is a big part of trading. A lot of people or a lot of traders, a lot of retail, a lot of people in the retail space, they think they have to be, the gold trader or the platinum trader or the oil trader, the Bitcoin trader. You trade clean assets. It doesn't matter what it is. The name does not matter. What matters is if there's enough liquidity in the asset and if the chart looks clean and you're able to open a position on it. Those are the only things that matter. So when we look at charts, whether it's ETH/USD, whether it's ADA, BNB, any type of stock, whatever it is, just forget about the name and look at what the asset is doing. Because when we enter a trade, we're not trading, say, ASTS. We're not trading ASTS because we think it's a multi-million dollar company. You guys want to know what else is a million dollar company, billion-dollar company? To use bigger numbers here, Zoom. Let me ask you, would you guys buy Zoom? No, but it's a name that everyone knows. So detach or disassociate yourself with the asset name and just screen for the cleanest markets. And I'm going to show you guys how to do that right here today. Now, before I jump into that, I just want to give a little attention to something that I think will really help you guys, because today I'm on the charts. I'm feeling great. Plain and simple, I'm feeling great. There are some days I don't feel that great. There's probably some days where I shouldn't be trading. There's some days where I should take some time to myself. There's some days where, I really can't think straight and, I can't, put together in proper, or I can't even think, right? And those are the days that are the hardest days. And sometimes it feels like you're kind of trapped in an ongoing loop of living the same day over and over again, stuck in the same shitty mindset over and over again. And like you, like me, like anybody else, we're humans and we all go through something similar. Okay. So what I've came to realize, and sometimes you realize something, you implement it, it starts working for a period of your life, and then you sort of get away from it. Then you start to forget what you were even doing in the first place to do something or feel some type of way. So today I had a really good day at work. It was a longer day than usual. I had to put in a little more effort. I had to stay a little bit longer. I had to, put my mind to the test a little bit more. And after a long day, I went to go hit a workout. It was a great workout. I think that everybody who wants to take on trading, since trading is so much involved or revolved around discipline, you need to be doing some sort of physical activity, at least for an hour every single day. So I got to the gym. I had a great workout. I was feeling great. I come home. I'm ready to bang out this big video for you guys on a big back test. And I just know that I'm going to complete this back test and it's going to be profitable. And if it's not profitable, I know if I take a little bit more trades until it's profitable, that will come, right? Because our profitability isn't determined by the couple trades we take in this video here today. The profitability is going to be determined by the trades we take over, 5, 6, 7 months, right? So it's going to be determined by the trades we take over a longer period of time. Now, what I was getting at with that is that oftentimes when we're in that kind of ongoing loop of, shitty thoughts, negative thoughts, we're kind of lost. We don't really know what we're doing. We do know what we want, but we're not putting the effort to get it. It really comes down to the fact, or it comes down to the challenge of working harder in your everyday life. I noticed that today when I had a busy ass day at work, at the gym, in the morning, getting all my stuff together, that the harder I work, the more energy I have right now, which is exactly what we think isn't going to happen when we do work hard, which is funny, which is why a lot of us are like, oh, if I do that, I'm going to be too tired later on. And then you never get to that. And then you face the same chores and same thoughts and same decisions tomorrow. But what I really want to get at today, guys, is every single day, work hard, because that's what's going to, I guess, give you the proper fuel or start the engine enough to bang out the whole day. So yeah, without further ado, let's jump into the video here. So the screener, let me see here. And if you guys actually don't have a screener, but you guys want to screen for markets, there is a little screener here in the bottom right. You open it up. You can kind of filter for things. I'll open it up here. You see all the assets on the left side. You can sort it by performance over, say, 1 week, 1 month, 3 months. You can kind of look at what's moving bullish. You can look at what's been moving during extended hours, meaning hours that the market's typically closed for retail traders like me and you. There's a bunch of stuff in here. You guys can look for it yourself. It's probably just as good as any other screener. It's just about getting, I guess, used to one and comfortable with one and knowing what you're looking for when you're actually screening the market. Okay, so this here is going to be the first market we look at. And sometimes they don't pop up, or they don't pop up in the US stock exchange. Usually I like to just keep it to US stocks, but I do have some filters on here. So let me move that out. Let's look at this. Bearish, wouldn't trade this, messy, not a clear trend, ugly, move on. Open up the next one. We got ARM. This has been moving bullish. It's kind of choppy. It's kind of moving out of the top now, but there's really nothing to trade. Maybe it starts to move like this in the next year, 2 years or so, which is good. You could have traded it down here. Anything in these areas here, I wouldn't have traded on the long side just because it's under the MAs. It's breaking down. It's big moves. It's kind of choppy. It keeps dipping under the MAs at these points here. So this is another market I just wouldn't trade because it's not screaming at me. It's not just screaming, I want to move bullish, buy me. And that's what I'm looking for when I'm looking for a market. Okay. SoFi or SoFi Technologies. Now this, okay, it looks like I've actually traded this. So let me restart that here. But this, guys, this looks like a market that I could actually like trade here in front of you guys. Yeah, we could trade this here. Let me see. Yeah, sure. Why not? This will be the market we start at for today. So what I do is I'm not going to bullshit you guys. Like we all know that this market moves bullish. Okay. Now, since we know it's a bullish market, you have to be honest with yourself in backtesting. If you know what's going to happen, you don't just go in and take trades anywhere and everywhere because you know the market's going to move bullish. You need you need to pinpoint an exact entry style. And then 2, although I know this market's moving bullish, I'm looking for certain validations all the way down until I can actually get to my entry time frame. Then once I get to my entry time frame, I'm looking for the exact setup that I know to be or know will form eventually in the market for me to be able to trade. So although I know this moves bullish, I'm not going to trade it unless something is 100% met on my own side, or sorry, on my own end. And if nothing happens, that's great. If I take a loss, that's great. But just because I know the market's going to move bullish doesn't mean I'm going to dodge the entries that I should be taking, and doesn't mean I'm going to enter anywhere and everywhere because I know it's moving bullish, right? You have to be honest with yourself in the process. Honesty with yourself is going to build confidence in what you're actually doing. Because in the chart, all of your confidence is built from the proof you're building every single day. So if you're dishonest with yourself in backtesting, you are only hurting yourself. And this is all about 1, being honest with yourself. 2, disciplined actions lead to the results you'll want. And then 3, well, 3, I don't have a third one off the top of my head. But without further ado, what I'm going to do is I'm going to throw this back here, because you'll see here, guys, on the 2-month time frame, this wasn't even a bullish market. until we got the structure break down and then make this big bullish push. That's when I become interested, but I need that pullback to happen. And you see that pullback happen with the weekly breakdown. So now all I'm looking for is, watch, I'll blow your mind. Take this. I'm going to, let me actually do a little bit more here. I'm going to take a little bit more of this up into this bullish push. So this here, that same market structure that happened on the 2-month is what I'm looking for here, right? Because that's going to signify bullish momentum in the market. Now it's showcasing that with structure. But as we know, a lot of people use indicators to also give them hints on what the market would like to do. The most popular one is probably MAs, and you guys see I have MAs here. So we can use those two as confluence, because if the market structure does do something like this, and the MAs, let's kind of draw over these MAs. So it's a 10 and 20. The bottom darker one is the 20. So let's do 20. Say the 20 comes like this and then starts rising around this area. And then the 10 kind of dips under, comes back over the 20, and then also aligns with the 20 and this bullish pullback. That's essentially two confluences, you could say. And I don't really use that word. We're kind of just using it right now because you've probably heard that word. But if we're able to stack confluences with the outlook on the market, then it's another reasoning behind why our entry becomes good. If we can't stack higher time frame confluences, then it could be a reason to actually stay away from the market and wait for such and such to happen, so we can validate further down our system's rules and maybe, just maybe, be able to get a trade on the market. Okay. So I'm actually going to leave this on for you guys just for now anyways. And I'm going to play price on the weekly. You'll see price kind of makes a pop here. Now, does the daily flush? No, the daily doesn't flush. So let's keep playing this. Does the daily? Okay. So notice here, guys, that I drew this out like it was going to take way longer to happen, right? So I played the long game. This could have taken a while to happen, maybe a year or a couple years to happen. But the strength of this market pushed this price on the weekly back above the MAs right away. It didn't take time to do all this mumbo jumbo playing around. It bounced back up over the MAs right away, which is super, super key to recognize. Because if you don't recognize that and you are waiting for something like this longer term to happen now, well, chances are we know that this market does that, but chances are on other markets you watch, it's going to do that as well. Now, maybe it breaks down and then resets up, but we're riding momentum. And right now in this chart, momentum has brought this market back up right in this area here. Okay. So I'm going to go ahead and delete that now. And we do get a bullish structure point here. So I'm going to label this with a 1. That's my first bullish structure point. And then I need the daily to have a pullback here or a break of structure and then reset up again, which it does here. See this here. So this would be kind of the first bullish breakout here. Or the one that signaled accumulation, right? Because you kind of have a break and then it plays around in this area here and it kind of breaks through that base, that roof, that resistance, whatever you want to call it, and creates this bullish structure point here. And then it does so again right up here. Now, you could say it happened right here as well, but for me, my rules state that for me to label this a bullish structure point, in this area here, I need to see my 1 hour breakdown. So let's see if the 1 hour breaks down, because this could be my second bullish structure point on the daily. See here, TradingView loves to take a while to load. And no, it doesn't break down here. You'll see it just rides the averages and then breaks down later. So this up here would be my second structure point. You'll see there's probably entries somewhere down here, but I missed them, and that's okay. I was kind of just caught up and giving you guys the example. But what's nice is that since then, the market is still pushing bullish. And the goal here is to run liquidity, because when the market is bullish, the goal is to run the sellers, right? We want to hit those stop losses. We want to take them out. People who can't recognize the order flow and are just buying and selling everywhere, well, those are chances. Those are the people that have a higher chance of just losing long term overall because they can't read the actual market. And three, I mean, we make profit off the essentially the people being wrong. Okay. So this is the high we're targeting right here. I'm going to jump down to my 1 hour. And remember, guys, this is a daily break of structure number 2, or daily, my second daily structure point, because the 1 hour broke down to create it. Without a breakdown, there's not a higher time frame structure point. So you'll see here the 1 hour bounced above MAs here and then re-breaks down, which is fine. It just wasn't ready to go right here. So we can label this not ready, because what would it have done if it was ready? Not ready. It would have held the MAs here because those are the averages that people have been buying this asset at over the past 10 or 20 candles, but it fails, meaning buyers didn't want to hold price up in this area here. Those are key subtle signs that you must look out for, because if you don't understand or you do miss those things, you guys will be stuck thinking that here's a safe time to buy down here. Why is this a safe time to buy this market? We're under the MAs, meaning we're under the average of price over the past day, 20 candles, 10 candles on the hour time frame. It's weak. It's a sign of weakness. And signs of weakness are not what we want when we're buying into momentum. So keep that in mind. So what we want to see is momentum on this 1 hour time frame. Momentum. Boom. Okay. Big push. Wow. So we ran, or we're kind of running the liquidity of the daily second structure point now. And we're on our way on the daily to make that third structure point, which will be somewhere up here. Somewhere up here, because we know the market moves like this. And if you remember or watched my last video, and if you haven't, I highly recommend you do if you want to know the perfect places to enter in the market. We know that the safest places to enter are down in these areas that are going to create these structure points or higher highs in a bullish market. So since everything's validated down to our 1 hour, we're looking to continue this momentum and make a second structure point up here. But for this to be the structure point number 1, we need to see my 10-minute breakdown. So let's wait till the 10-minute breaks down, because at this point, my 10 minutes overextended. It's made, let's label it out so everyone can see. It's made 1 structure point, 2 structure point. Or that'll be this would be kind of the second one, actually. Yeah, 2. This down here would be 1. 1, 2, 3, and then 4. So yeah, this has been moving bullish on the 10-minute for quite a while. It's made 4 bullish structure points. But on the 1 hour, we've only made 1 bullish structure point. So this can still continue up if this momentum wants to play out. But first, we need to see the 10-minute reset. We need to see it pause. And this is what I would call a pause or a sideways market. And I'll tell you why. 1, let me get rid of this. You have to train your eyes to recognize a weakness or a subtle difference in the move. So you guys will see here, these other impulses on the 10-minute, they're very clean. They're not really wicky. Kind of go straight up, straight up, straight up. This one's like struggling to go up. You'll see there's wicks, a lot of top wicks, up, down, up, down, up, down, up, down, up, down, up, down. So it's weak. And it's not like in 1, 2, 3, 4, 5, 6, 7, 8 candles. Let's play the percentage game here. In 8 candles, it's moved about 1.87%. Let's compare that to other moves. 3.66. 2.8. This one was a smaller one. This one was a little weaker, right? Which you notice after the weakest push here, what happened? Price over here ends up failing under the M8s. So this is a sign here, even though it's not the most like clear sideways, it didn't do something like this. There was some sort of sideways action here that paused. And on the 1 hour time frame, you will see in the midst of all that 10-minute sideways, you get down candles showcasing that pause. So what's nice here is that we can consider this. I'll use purple on the 10-minute. I think we are getting more comfortable with our colors on this channel. So you'll notice that, let me actually write this down. So my weekly equal white labels, daily equals blue labels, 1 hour is green labels, and my 10-minute equals purple labels. Now I'm gonna make this a little bit bigger so everyone can see it, and I'll just stick that over here, maybe a little bit bigger. That's fine. Oh shoot! I wish you could like pin stuff to the back. Can you lock it? Well, what's this? Anchor drawing. Oh, that's perfect. Okay, perfect. So let me unlock that. Yeah. Oh my god, that's actually great. Wait. Wow. So if I do, like, say I write a little note down here somewhere. Okay. Gotcha. Never mind. Okay, so now this 10-minute from this sideways price action that kind of got contained in this area here, it's made that first structure leg here. So I'm very specific with my entry. So I have a 3 candle setup rule. So 3 candles, first candle to enter, I must have a high. First candle is a high. Second candle, a low. A low is taken. I'll move that over in a second. And then third candle breaks down, or no, sorry, breaks above the high, which is the first candle. So these are my entry rules. That's perfect. So what that means is now the second candle, a low could be taken on the third or fourth candle after the high is created. And the third candle, it could break above on the fourth, fifth, or sixth candle. That's just the bare minimum for those rules here. Now this here, you'll see we have a high. And then on, so this is the high, has a lower low on each side, or a lower high on each side. And then you'll see here, 1, 2, 3 candles later, I see a low get taken, right? Now, this, if the next candle did something like this, I'll make that white with a black outline so you can see. If the next did something like this, then I would actually be in this trade. Now, I know what my setups look like, and this setup, for example, does not look clean right now. Maybe if it did something like this and actually created a more clear down move on the downside, then I would be interested. But this looks like a very weird market. It looks like it's still going sideways. So yeah, I want something a little bit better. And that was a market open candle. So that was very wicky. So we're going to sit out of this market for now. There's nothing to do. This could go like this, and I won't be a part of it. And trust me, guys, we both know this market moves bullish. So there's a good chance right now this is what the market does. But remember the importance of being honest with yourself when you're back testing. Although I know what the market has done or is going to do, I'm not going to force entries that aren't my entries, because it's all about being honest with yourself to be able to build the proof. And then with that proof, it validates you actually know what you're doing, and you're able to take everything you've done in your backtesting sessions and take it live and show yourself you can be a profitable trader. Because I know if you just do that thing, and that thing is be honest with yourself, whether you're putting in the work, whether you're doing backtesting sessions, whether you're studying. It's all about being honest with yourself. So be honest with yourself and you're going to improve. Okay, so let's see. I can't be a part of this market unless this 10-minute breaks down. Everything else is good. Everything else is good, guys. Remember where we are. You have the weekly breaking up. You have the daily breaking up, showcased by the blue labels. Inside the daily breakups, you have the 1 hour breaking up. And inside the 1 hour breaking up, you have the 10-minute breaking up. It's all fractals, guys. It's all doing the same shit. So it breaks down. Nice. This gives us an opportunity now to get involved. We didn't have an opportunity here. It was market open and there was wicks. I don't like that. But now we have an opportunity because we waited. And you're going to get rewarded for waiting. And the reward is being able to take a trade, whether it's a win, loss, or break even. The reward is all of your rules being met and you're able to execute. So let's see if we get a trade here. Want a clear move up and a pullback. That was a weird one. This was a weird one. This might be a trade for me. Let me see how the one. If the 1 hour MAs are clean here, this would be a trade for me and this would be a loss. Full disclosure. Yeah, the 1 hour MAs are clean. Yeah. So I took a loss here. See, guys, I took a loss here, right? Because remember, my 3 candle rule. The first candle, I need a high. A high is a lower high on each side. Done. Second candle, a low is taken. You see on this second candle here, guys, the low is taken. Then the third candle or the fourth candle, any candle after the third breaks the high and I'm entered. Okay. So I'm going to put my stop loss on to showcase this was a losing trade. Now, something I've done differently now compared to my last back tests. Hopefully this little virus protection isn't on the video there. I just closed out of it. Sorry if it was, guys. I've actually decided to cut my stop losses in half and then let the trade go like that. I'll get into the reasons on why I did that maybe in a different video, but I guess if you just are looking for a couple things to note on why I did that, it's because when the market wants to deliver, it's not going to come back to your entry. It's going to take off. Those are the cleanest markets. And I noticed that if I do put my stop loss under the low of the second candle, or the general low overall, in all my winners, the market doesn't come back there anyway. So why should I guess, spread out my risk over a higher stop loss rather than just shorten my stop loss and increase my RR? That's how I looked at it. That's what made most sense to me. So that's what I did. So this would be a loss here. I'm going to label this as a -1. Now, something that would have maybe prevented me from taking this trade would have been the MAs. But to be honest, like, they make a clean move up. The 10 is sloping up. The 20 is kind of sideways. It looks like it's like starting to slope up. It was okay. It was okay. I'll count that trade as a trade because I think that's something that is viable to be taken. So let's keep playing this. If it goes, it goes. If it comes back and resets up, we'll take another trade. Well, we won't take another trade because I only take 1 trade per entry or per 1 hour range. So let's see. So what, does the 1 hour break down? Yeah, the 1 hour breaks down, guys. So in this area here, we are given an entry that ends up failing, and then that failure led to a 1 hour breakdown. So now everything in terms of the weekly and daily is aligned, but this 1 hour is not realigned because look, it's under the MAs. The momentum on the hourly time frame has dried up. So we need to wait for it to come back in. And as long as the daily and the weekly momentum is still there, well, then we can look for a trade. Simple. Re-listen to that. That was key. So I hope you guys don't get tired of me talking. Sometimes I feel like I talk too fast, I talk too long, and I repeat myself. But repetition and hearing the same thing over and over again is good. So let's continue. So momentum comes back in on the hourly. You get the first break above this resistance line or this roof, whatever you want to call it, doesn't matter. And then you have the first structure leg on the 1 hour right here. And now for this to be an actual structure leg, we're honestly at this point, we can call it a potential structure leg because it's not a structure point until I see the inside break down. Otherwise, this structure leg is still going on. So this right here, I would classify as the high. And this right here, I would classify as a reset just because it looks like the price was pushing, failed to push down, makes a little push up, kind of goes sideways. 10 kind of goes sideways. I would no. Now that I'm thinking about it, I wouldn't call it a reset just because technically you could trade here in that area on a lower time frame. You could trade here as well. It is an uglier kind of delivery. It does get choppy, but I think because it is inside this structure point from this low to this high, and I don't see any clear loss of momentum or clear break or prolonged sideways that took a long while. Like I got an example here. No, I don't have an example, but it looks like it rides the MAs and keeps making pushes higher. Whereas if we go back to that daily reset here, it actually breaks under the MAs, goes sideways, and then breaks back up. Whereas this holds the MAs, moves a little sideways, not for too long though, and then continues moving. So, 1 hour high still isn't formed. And you'll see a crazy move comes into the market. Wow. This is just one of those markets where if you got involved on a 10-minute time frame, tons of entries. Now, this is the first reset we got on the 10-minute, the first clear reset. Gonna stop yawning. So hot in here as well. Like it's actually scorching. I think it's because I have these like studio lights up. It's so hot with the PC on and all that. It's fine though. I know you guys are thinking about me at your house, hoping I stay cool, and I appreciate that. I really do. So yeah, 10-minute breaks down, creating that or allowing us to label that 1 hour high. But something I am or I do get confused about in my own rules is for these ones that look like sideways markets for a bit here and do create like a down candle on the higher time frame, which is my 1 hour. If I label it a pause, I was kind of going off a rule where it's like no reset, no structure point. And since this structure point precedes a reset, That's what I would consider the first structure point on the 1 hour. The I guess the cool thing is that there's no right answer. It's just whatever I actually want to obey and stick to. Because if I stick to something, I'm not going to confuse myself. It's all about limiting the amount of things that you have to look for and looking for one specific thing. So, without further ado, this 10-minute here breaks down, creates kind of a roof, and it breaks through the roof. Well, what do we know about markets that break through roofs? They've created a bullish structure point. This being the first one. What do we know about markets that break through roofs? Well, they create a structure point. What do we know about markets that break through roofs? Well, they create a structure point. And after the market breaks through the roof, what tends to happen? Breaks through the roof here. What happens? Takes off. Breaks through the roof here. What happens? Takes off. Breaks through the roof here. What could happen? It takes off. So let's see. We now have a high. We have the second candle. A low is taken. The low that created the high was taken. And the market fails. So this no longer matters. It's just like that. Something becomes invalidated. But because of the clarity on the 1 hour, we could still continue to look as long as the 10-minute resets up. So let's wait. Kind of plays around in this area here. Full sideways market. This roof kind of gets extended. Kind of goes on for a little bit longer. And price breaks out of the roof. Now, what can we expect when price breaks out of the roof? If your answer is anything like this, you are right. And that sole concept can take you very, very far. Because we can think of it as once price plays around in this area, it's ready to go. Once price plays around in an area, it's ready to go. Once price plays around in an area, it's ready to go. So, as we get prepared for an entry here, our understanding or our assumption is the market wants to go, even though 90% of the time it will not. And had to scream that because that's something I'm working on as well. You get rewarded for taking on risk. But the powerful part is when you understand the purpose of you putting up risk is to take losses and break evens for the small amount of time you're actually going to win. Well, that's when you'll start seeing more returns in your own trading. So 18 stop loss, 18 pip stop loss, or 18 cent stop loss since we're on a stock. Put it to 9. And let's wait till I'm entered. Okay, we're in this trade. I break even at 4R. My break even, 2R. The break even's right there. Price gets right there. My stop loss goes like that. So comes up, doesn't hit my break even, comes down, almost takes me out, finds the averages. That scared a lot of people. This right here made a lot of people who took the same entry as me in this area. This kind of weakness that broke down here, that 1 made people sell. That 2 made people double down because they thought the market was cheap. And 3, well, I don't have a third one. But the people who do this over and over again get entered or re-enter trades out of scarcity. Well, they're going to put on more risk in the long term, and more risk when you're losing most of the time, if you have a lower based win rate system, which the most profitable systems do, well, you're going to force upon a lot more drawdown on yourself that exceeds the amount of profit you'll actually get over a long enough time. So we're in this trade still. They get taken out. We take profit, or we move our stop loss now to 4RR at 8RR. So when price reaches 8RR, we move our stop loss here. Right now, our stop loss is currently here at break even. So wherever my stop loss is, I'll make the line red. Now, since we're kind of going into management because we finally got an entry after how long, guys? How long did it take for us to find an entry? It's now, our entry came on June 26th. We've been watching this market for, wait, what? Oh, sorry. Yeah, it came on June 26th. We've been watching this market for about June 4th, 22 days, we'll call it. So this entry here, now, if you guys remember, in my other backtesting videos, I usually put my stop loss down here and I aim for 1 to 5. And when the market reaches 4RR, I move my stop loss to 2RR. Everything with my half stop loss system gets doubled. So instead of taking full profit at 5RR, I take full profit at 10RR, which is all the way up here. And instead of moving my stop loss to 2RR when price reaches 4RR, I move my stop loss to 4RR when price reaches 8RR. Now, what's powerful about this system is that nothing changed in terms of how long my trades deliver in. Because if you guys look, this is at the top here, that's 10RR. But if I do it, my normal stop loss, it's 5RR. So the trade is running the same distance, you could call it. It's reaching my 1 to 5. But because I chose to half my stop loss, I now get double the reward for staying in the trade the same average duration I normally would when my trade runs 1 to 5, which is anywhere from 1 to 3 hours. Could be longer in, different scenarios, but you guys get the point. The power in a simple rule change is doubling the amount of profit I'm taking from a winning trade. Now, this trade may not win. This trade may just come down and hit me for break even. That's fine. But in the 5 to 10, less than 20% of times I actually win in a trade, I'm getting double my reward with this rule. And I really want you guys to take that and understand the power in a simple management rule, because that could change your trading and your profitability immensely. And you come across different rules by hearing about other people's rules and seeing where you can implement, maybe such and such into your own system, or you just start playing around with things you notice in your own charts and you implement those things. But let's let this trade play out and let's manage it. Right now, stop loss is at break even. Let's play. This is 4RR. 4RR. What do I do at 4RR? Well, normally I would move my stop loss to 2RR. But we don't do that anymore because my stop loss isn't down here. It's over here. So I can actually remove this line. We move my stop loss to 4RR at 8RR. Let's see if price gets there. I'm going to play that back a little bit. Right here. Oh, sorry. I know why I had that line there. Let me see if I can actually get that back. Okay. Gotcha. So price came up here, reached my 8RR. So my stop loss is here now. I can delete this line. So price at this point either comes back and I take my 4RR win, or it goes up a little bit more and I take a full take profit at 10RR. Done. I'm out of the trade. I'm out of the trade. I just sat on the sideline for 20 days to catch 10RR. Well, if we count this loss, which we are obviously, 9RR. These trades were a week apart from each other. In a week, I made 9RR. Well, let's do the math. Everyone wants, a funded account. So let's take this. If you made times 0.09%, $9,000. Now, it took us a month to find this winning trade, about 22 days. Are you okay with $9,000 over 22 days? Let's be fair about it. Let's say, you pay taxes, do all that bullshit. You're left with, let's say $6,000. $6,000 over 22 days. Well, we take $6,000, divide it by the 22 days. That's 3 weeks. Now, let's say Saturday and Sundays you don't work. So that's, 6 days in amongst those 3 weeks. So out of the 22 days, I mean, you're at 16. So $6,000 divided by 16 days, you made $375. How many of you, if you were to have a $100,000 account and take a trade like this, is this more money than what you're earning right now? Would you be okay with substituting your salary where you do a job that you sit on your ass for a month and you get 2 trades, and those trades equal you making about $375 out of the working days each and every single day for the whole month? Or would you rather sit in your job every single day and do the same thing? Well, I know the answer, because this is why you're here on the channel. And you need to understand that this is the reality of what a trade can look like based off X account size, because the account size doesn't matter. This could be $1 million and you made 10% on it and you have $10,000. Wait, no, I did that wrong. This could be $1 million. You make 0.09 and you have $90,000. In what? How long did this trade take to play out? A couple hours? 1, 2, 3, 4, 5, 6, 7, 8, 9. If you have $1 million in 9 hours, you just made 90 grand. Now that's an extreme case, obviously, but everyone can scale to $1 million, right? Of course you can. Of course you can. That's the trade. And now we're at an instance here where, if you guys remember from the last video, right, if we go to the hourly, we find ourselves up here creating that second structure point on the hourly, and buyers are potentially fatigued. And we need to wait for a reset here. We must. We already caught 10% on this move. Let's dip. I don't want to enter here. I entered down here. I got to move. So let's see. After I take my water break. As you can see, guys, yes, it may sound complicated, but when you really separate the aspects of everything I've showed you here, whether, it's just the technicality of the system, it's your trade management, each one of those things has rules. And if you can, create a rule-based system out of a couple sentences, then it's very powerful. And what I think I'm going to do here is I think I'm going to have this trade on the screen. Actually, I should have done this in the beginning. I should have wrote out my rules on the screen and kind of went about it with you like that. But I think I did that in one of my other back tests. But that's what I'll start doing moving forward. And I can trade different I guess I can create different systems based on, the different backtesting video. But there is a part of me where in these first, batch of backtesting videos, you can really see I'm just doing the same thing over and over again. And sure, you can do whatever you want with the rules. They could be, they could be whatever you want them to be. Really, anything works. If you stick to one thing, anything works. At least I think so. I know so. Okay. So let's wait for this to pull back down. We're in June 27th, 2025. And we got a pullback. Can this market continue going from here? Yeah. We're only 2 structure points up on the 1 hour. The daily looks kind of like extended, but sure, it could go for one more push. That's important because sometimes I come to a live market and I'm just looking at the daily. I'm like, it kind of came down here and pushed up for like 3, 4, 5 candles. Maybe I got to wait for the 1 hour to retrace. And then the 1 hour just kind of keeps going and I miss trades. So that's something I got to be better at as well. So 10-minute breaks down. Let's wait for that roof. Let's wait for that roof. Raise the roof. Let's wait for that roof to be broken through because we know what happens when roofs are broken through. Boom. Oh my God. This is where if you didn't take, the full profit, this is where you just win. Oh my goodness. 26 RR. The banger trade. And you'll see here in this area, let me pull that a little lower. In this area, it didn't even give me an entry. Like it made like little structure down here, but it was under the MAs. If you guys have noticed, anywhere I've taken a trade comes through this roof and the MAs above the MAs. Maybe the roof was like kind of down here. Actually, I don't really like this trade. I was like, I imagine the roof was like right here. Like kind of these structure points and then kind of make like a weak push up. It was fine. This one like breaks through clearly. This one's way stronger than this one. Look, this one breaks with a very strong volume miss candle. Then this one's kind of like breaks up, just gets above the averages just a bit. Where this one's like above the averages by a lot. So there's like 2 key differences right here. This is where you can like really compare your setups and actually distinguish the ones you want to take compared to the ones you don't want to take. And it's just by simply like asking yourself, like, what did this entry do that this one didn't? And I guess this one made a smaller push above the MAs next to like choppy price action. This one created like a big push out of like any sideways or any choppy area and like full on delivered. Whereas this one kind of chopped up in between all this chop to the left. Compare contrast. You know how it goes. But yeah, now this market is on its way to make a third structure point on the 1 hour time frame. And would I enter here? Probably not. Daily looks too high now. I want the daily to like fail, or sorry, the 1 hour to like fail. So what I want. It's too high. Like it could deliver. Of course, it always can. Like if I showed up to the market here on any given day, like, am I trading that? Like too high up. Kind of choppy, but I didn't really look into this action because I didn't like it. But we can label it and like take a look at what it actually did for the video. So 1 hour, or sorry, 10-minute, or sorry, 1 hour created a base or a roof, breaks through, creates this first structure leg, and kind of creates this potentially second one if the 10-minute broke down inside of this area here. Let's see if it did. No, it didn't. So this is not the second structure point. So price breaks up right here. Ooh, yeah, this would be an entry. It would be an entry because the 10-minute actually looks cleaner than the 1 hour. So the 1 hour, I would have looked at it right around here. Because look, guys, if we look back to my entry rules, I'll put it over here for now. It kind of, you can kind of prorate this to the higher time frames. So we have a high and we have a low on the second candle. Takes, second candle takes out a low to the left. And then on a candle after the third candle, it validates. Now we know that on the entry time frame, my time frame, the 10-minute, I expect price to go because it's broken through the roof, it's made a structure point, and now its plan is to run that. But this isn't my entry time frame, but it could be an entry time frame if I wanted it to be. And it's doing the same things I would expect when a market is actually setting up to create a move. So yes, I would have dropped down in this area here. Full honesty. Now, how that would have looked is, well, you kind of get this like retracement. It looks like kind of weak. Probably wouldn't call it a reset in here just because like it was kind of like a decently clean sell off, caught the averages and continued moving. But right here, this is definitely a reset. Like this is a break. Fails the MAs, failed to like take any high to the left. Like this area here did not run this area here. And then price bounces back up here. And this is my entry right here. We would take this. And this actually takes me out for a loss. Because if I stick to my rules, this stop loss is 16. So I would half that to 8. This candle right here would tap me in. So I'd be tapped in right there. And then it ends up taking me out right away. Right away. And this market ends up as a runner. So what I thought was going to be a win to my data collection, when I looked closer, I'm on the actual setup, it takes me out for a loss. And I'm going to be like, oh, I don't want to add this loss to my back test. It's going to ruin my progress. It's going to ruin my equity curve. No, because when I go to trade the markets live, these things are going to happen. Either, I feel it's wrong. Either I feel it's right. The market does not care. And I need to mentally prepare myself for these things to happen and be able to take it on the chin. Because if I don't take it on the chin, that's when you're going to, double up on your trades, over leverage, start taking trades everywhere to make back your losses. No, the reality of day trading is that sometimes in an area, you're going to get an entry and the market's going to take you out right away. And it's going to lead to a -1. That's the truth. And you did nothing wrong. You did nothing wrong. Everything was perfect. Price played around, came out of a roof, created a setup, and you took it. The roof was kind of weird here, though. Like, I see these points here. I would have drawn something like this. You kind of, like, look where it came out of the MAs from. Kind of, like, came down under and then, like, broke through around this area here. That kind of lined up with this little down move in the structure leg. So, yeah, that's kind of how I would look at that. -1. So we've now taken 2 losses, one down here, one up here, and then a win in between. So I feel like this back test has been going on forever. We've taken -1, +10. What? Okay. I'm trolling. I'm actually trolling. So we're at a total of 8 RR. And we are currently July 7th. And this, guys, let me take this out. Let me go back to the weekly. It was a clear market condition. It was a higher time frame move that showed me it was ready. It was ready for momentum, and momentum was coming into the market, which is why all these lower time frames down from the weekly started to move in alignment with such. Because this here, oh, I can't write anything or else it brings up all my tools, labels, back test. I'm usually a little bit more neater with all my labels, but whatever. This here with these breaks up was pure signs of momentum through this little groove here. And what I want to, I guess, have you guys think about is that if we look at this move in here on that higher time frame, 2 month, for example, you see it's just showcased by individual down candles. But the fact that the move is shown differently on different time frames doesn't change what is happening on the inside. It does not. You're just seeing it in multiple different ways. Because instead of me wanting to see this, we'll call it a pattern for now. Instead of me wanting to see this, maybe I'm someone who just got used to, instead of seeing like overall structure, I usually like to see candles for me, to follow something. So maybe instead of seeing this, I actually was on like a monthly time frame and I saw this. Let me ask you guys something after I make my drawing a little better. Make this a little bit thinner. I'm an artist, guys, not a trader. I'm an artist. And art shall be perfect. Not really. You guys get it. Are these two the same things? Are these two the same things? They're the same things. So if I'm someone that never even wanted to look at the weekly time frame, I should know what's going on in this area. I should know this is happening. I should know this is happening. I wanna kind of blow your guys' mind some more, but I think I'll leave it for a different video because I actually want to put eventually I want to put some things in the concepts. I am actually, I got a couple things in the works for you guys. If you guys even watch this whole video, like how many of you actually stuck out to the end? Real ones. But working on a couple things, working on a newsletter. In that newsletter, it's going to be called the MCU letter, the Market Cycle University letter. And that letter is going to send out drills that you can do in your own backtesting or practice sessions that is going to build mental repetition and visual repetition within your own trading. And that is super important because all this is, guys, all these candlestick, all these patterns, all the mumbo jumbo, it's all about getting your eyes used to seeing the same thing over and over again. And I'm happy that I get to release a newsletter that trains you like an athlete. Think of it like you're playing basketball. You're working on certain jump shots, certain positions on the court, certain, I guess, passes. You're a football player practicing certain routes. You're practicing different catches for different scenarios. This is all about being an athlete. You're trading, in your trading, you got to treat yourself as an athlete and you got to be looking to improve every single part of your game. And the MCU letter is going to be exactly what you need, an exact tool to guide you on practices that will bring your mental and repetition up to par with what it has to be a profitable trader. And if you guys actually subscribe, and that will be in the description below, I promise you, you guys will see within the first couple weeks, if you implement what's actually being sent out to your emails, 15, 30 minutes a day, you'll see tremendous progress. You'll be above so many people. Like it's crazy. Without further ado, if you got any value from this video, share it with one friend you know that is also a trader, trading like yourself. Just like this video, comment on this video. Check out my other socials, because for people who can't stick through these longer term forms of content, I cut it up. I put it on my TikTok. I put it on my Instagram. I put out a lot of psychology tweets on my X account. Almost called it Twitter for a second there. So I am working on building a platform where you guys get a bunch of different, I guess, aspects of trading that all in all is going to help you just achieve this goal of being a profitable trader. That is my dedication. That is what I'm committing to. I want you guys to make it. I swear to God I do. Because I know how hard it is to make it here. Because I've been through it. I still go through it. So believe me, it's not about the likes. It's not about the subscribers. It's about me sitting here and helping you and getting 0 views on videos. Because I know this video in the future is going to help someone. I just know it. I really believe that in my heart. And if you feel that and you keep watching my videos and you build or you form some sort of trust with what I'm actually telling you, and as my videos get better and as my teachings get a little bit, tighter, and I'm able to put this all together for you guys in a way that's perfect, well, we're going to be good. We're going to be good. YouTube, peace out.